Per usual, video on this channel is for educational purposes only. It is not intended as financial advice. It is Tuesday. That means it's Teaching Tech Tuesday. And let's revisit an oldie but goodie, high probability chart patterns. Little did I know 7 years ago that chart patterns would be one of the highest viewed videos on my channel, but also one of the highest profitability per square inch knowledge sources in my brain. So I come to you with one of the most important videos you'll ever watch on trading, easily, guaranteed. So I'm going to break down several examples, how to trade this stuff, not financial advice. But the first thing you'll need, if you have zero knowledge of any of this stuff, is the ability to recognize these patterns. Luckily, we've evolved thousands of years to become pattern recognition machines. So in the description of this video, I will put several cheat sheets for you. This is the original cheat sheet, by the way, which still works from 2014. The link, you'll see many variations of these. They will not always agree with each other. And that's where you, the trader, come in and have to understand what the heck's going on and what to look for. This is another very good one. But I also like this one as well because it tells you how you can be actionable and where to be actionable. It teaches you how to fish. That's the important part here. It tells you categorical breakdown, the shapes, blah, 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 right? You need to know all that stuff. So yes, you'll see several of these. I'm sure there's some better ones that I haven't even, highlighted, but there are a ton of them out there. Additionally, there's a gentleman known as Thomas Bulkowski, who's a legend in the chart pattern space. And yes, this website is from 2005 or whatever, but he has every single type of pattern you can ever imagine. He's got failed patterns, busted patterns, he calls them. He's got statistical probabilities attached to all of these based on traditional markets. So again, if you ever want more info, there's definitely more info out there. And for me, he is the single best trusted source who's still putting out information to this day on this very website. All right, so just to get started, chart patterns, what are they? Repeated stereotypical shapes of price action. Okay, I hesitate to use the word fractals. For some people that has a different meaning, but it is a type of fractal. Their purpose is to help reveal sentiment or bias of market participants and therefore help you make a trade, which is where the profitability clicker should come on in your head. Like, okay, this is what I've been looking for. I need something to help me make decisions before it happens, right? It will also help you stay out of trouble more often than not because you'll recognize the sentiment or the bias of the market. It doesn't always mean every single little pattern is going to be actionable. It doesn't mean every pattern trade you take will be profitable, but it does mean it's going to help keep you at the table, okay, at the very least. And this is also another important point that people often fail to understand, especially if you're newer, and it is harder to grasp where the boundaries of these invalidations are, but deviations from a stereotypical pattern or a stereotypical volume profile does not automatically invalidate the setup, but it does reduce the likelihood of success. I'll talk about this more down the line. There's a perfect cookie cutter version of all these, right? Those cheat sheets are a perfect example. If you ever see anything like that with a descending volume profile, for me, that is a slam dunk trade all day. I take that trade. I don't think about that trade. If it works out, great. If it doesn't, great. But there's a reason these chart patterns pop up over and over and over again and play out over and over and over again the same way. Here's another very important point. Pattern failures and invalidations often lead to outsized reactions of an opposite bias, right? And I'll specify that again. But if you have a pattern that's been setting up for months and it fails, or weeks, right? Typically, you'll have an equal and opposite reaction, right? So you'll have, instead of reversal, you'll have continuation. Instead of continuation, you'll have reversal, and so on. Now, there are more patterns than this video will cover, but I'm going to cover, in my head, the best ones, the highest profitability, the easiest to trade, that sort of thing. The most common, really. That's what you really need to know. What are the most common? Where can they fail? How do you know when they succeed? That sort of thing. So the first step, recognition. Different shapes, right? There are triangles. You'll hear people talking about wedges, double tops, triple top, triple bottom, double bottom. Technically, an inverted or a head and shoulders is a type of triple top, triple bottom. You'll hear it called different things occasionally. This is like old school, like 3 Buddha bottom. You know, you'll see stuff like that. And to me, call it whatever you want. I know how that's going to play out, right? It doesn't matter. You know, whatever helps you remember what to do when you see it or how to identify it. That's the important part here. Double top is an M. Double bottom is a W. And there's a variation on that called the Adam and Eve, which is also very, very common. And an easy way to remember this, M for murder, W for win. Adam and Eve, clearly a biblical reference. And then there's some other more exotic, at least in the crypto markets, I'd consider exotic variations on the triangle, diamond and megaphone. And that's really it. So if you can get good at, 6 patterns, you'll be fine. You'll stay out of trouble. You won't be mega long when there's a pending head and shoulders breakdown, right? At the very least, the market is trying to tell you, it's trying to shake you and say, pay attention to me. Pay attention to what is going on here. Okay. You don't have to like it. You don't have to believe it, but you should take it into consideration as a data point when you're trying to size your trades, when you're trying to figure out stop losses, that sort of thing. Duration is another very important point. Yes, these can happen on any chart, any time frame, any market. That's right. Any chart, any time frame, any market. You can see it on the 5-minute. You can see it on the 500-minute, right? It doesn't matter. But typically, the higher duration patterns perform as expected more often than patterns that form on lower time frames. For instance, if you've got a 15-minute rising wedge versus a 2-month rising wedge, typically the 2-month rising wedge is going to have a better hit rate, a better probability of success than that 15-minute rising wedge, okay? Whether or not wedges are bearish or bullish is a whole separate conversation. I'm not even going to talk about that in this video, but I'll give you some examples. The third thing, as far as recognition is concerned, the volume. Again, another sticking point people love to argue with me about. I simply do not care what the volume profile looks like, especially in crypto, especially fragmented exchanges. Now you can sort of get away with understanding volume profiles a little bit better using indices and aggregating exchanges. For example, Binance, known to wash volume, known to use fake volume, right? Whose volume am I going to trust more as a signal? Binance or Kraken? I'm going to trust Kraken. Coinbase or some offshore unregulated leveraged market, right? I'm going to trust Coinbase, okay? So keep that in mind. Just because it doesn't have a descending volume profile does not mean it is invalidated, right? On the other hand, if you see this, if I see this, I'm like, okay, I sit up in my chair. Let's go, right? I have an example for ETH, an active one. It is July 4th, 2023. Happy July 4th. We'll see how this plays out down the road. But there is a mega descending volume profile on ETH that is worth paying attention to. And as I often say, for some people, identifying the volume profile is the easy step because seeing that descending volume profile first clues you, it tips you off into, oh, is there a chart pattern here, right? That's one way to do it. But again, I wouldn't invalidate just because it's not stereotypical, right? Yes, you always want a descending volume profile. I'm hitting this home so hard because people always argue with me about it. They're just like, oh, no, that's not it. That's not an inverted head and shoulders, right? As far as types of patterns, you'll see continuations, reversals, 50-50, that's like an equilateral triangle. I don't think I have any examples of that in this video, but generally, price always wants to cross the horizontal line, okay? That is the stupid simple version of all of these chart patterns. Ascending triangle has a horizontal line at the top, price wants to go through that. M double top has a horizontal line at the bottom, price wants to go through that, right? Inverted head and shoulders has a neckline, horizontal, price wants to go through that, okay? So keep that in mind. If there is not a horizontal, then the bias or sentiment tends to deviate a little bit, right? Falling wedges for me are bullish, rising wedges for me are bearish. And why are patterns so important? Helps you automatically, right? Again, I'm lazy. I don't want to think about it. I'm just boom, 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 systematic, right? The hardest part, the most subjective part about this should be the recognition. Everything after that should be automatic. So it gives you entry, exit, stop loss, and I'll go through that on all the examples I'm about to show you. I've also written, this is from December 2018, a very long and large Medium article on chart patterns, okay? I'll leave that in the video of the description below for some people who prefer the written word. And I talk a lot about this in that article, obviously. One benefit I have from the original video is now 7 years on, I've been trading these patterns, and I can tell you, you need to know them in order to be a profitable trader, in my opinion. Okay, it is the easiest thing you can learn to know and understand. So now let's get started with the examples. Something else to sort of understand is each pattern also has an opposite inverse accompanying version of that. The easiest concept to immediately identify there is an M is a double top, a W is a double bottom, right? Those are inverse. So just because I don't have an example of an inverted cup and handle, for example, know that they exist. And for some people, inverting the chart completely can help identify chart patterns better, right? You can do 1 divided by the ticker or 1 minus the ticker, and that will invert the chart for you, often canceling out your own bias, helping you identify patterns a little bit better. I don't have specific examples in this video. I'll get to that another time, but just keep that in mind. So I'm starting with a less common example. This is a cup and handle, like I said, bullish continuation. And with all chart patterns, stereotypically, you want something preceding it. You want either a bullish trend, bearish trend. And in order to be continuation, people will tell you, you need to have previously a bull market, right? Again, that deviates dramatically. If trading were easy, everybody would do it, okay? There are plenty of examples of deviations on this that work out. Just because you see a bearish cup and handle, at the end of a bear market doesn't mean it's not a cup and handle and it's not going to play out as you think it will. I would just consider the evidence and make a decision from there, right? Clearly, this is what you want to see. Now, this is gold, it's not crypto, but this is one of the best examples of a cup and handle probably you'll ever see on high time frames. And when we're talking about duration, this is a great teacher for that because this is a decade plus cup and handle, right? Now, Bulkowski will tell you that high duration patterns often fail. They often invalidate over time. Many people are still watching this as a cup and handle and are identifying it as a cup and handle. So we will see what actually happens. But some hallmarks of the cup and handle, obviously you want this rounded recovery back to the previous high. You'll also notice this is slightly tilted. Again, not stereotypical, not something you're going to see necessarily on a cheat sheet, but I wouldn't discount it because it's got a diagonal instead of horizontal, right? The handle as well can be diagonal. It's typically not rising above horizontal resistance. This is all part of recognition, right? The next step is adding Fibonacci retracements and Fibonacci extensions, or fibs as they're known, and determining, is this thing valid? Does the handle stay above 50% of the depth? And there is some subjectivity here because, again, if it is diagonal, if it is tilted, right, you have to decide, where's the high? Is this the high? Is this the low? Is this the high? Is this the low? That's up to the trader. I'm going to leave that up to you. But this is how I measured it. I took the highest high, the lowest low. Handle still above the 50% retracement at 1550 here. A handle below 50% retracement suggests pattern invalidation, right? So probability is usually closer to 0%, right? Or it's something else. It's not a cup and handle. You might also say, well, there's also a lower low here. Is that a big deal? This is a decade plus pattern. I want to give it some benefit of the doubt here in this specific case. Maybe cup and handle versions on lower time frames, not so much. So we're on the recognition. We got it. We got the entry. Okay, entry would be, you would treat this as a breakout trade above 2035. Some people, like myself, if I'm confident enough in the pattern, will begin to accumulate based on the bias or expectation, right? So if I'm bullish gold, if there's some sort of event, or some sort of news, or whatever that I'm expecting, I will start to accumulate. ETH, again, I'll get to this as an example, but ETH is a good example of that. Even though realistically, all of these are breakout trades. You want to wait to make your trade. For crypto specifically, things tend to move so fast, so quickly, it'll get away from you. So again, this is back to sizing. This is back to understanding where the stop losses are. Stop loss for this trade to me would be realistically probably a lower low or 1550, right? So I'm accumulating this entire time above 1550. And then ideally you're done by the time this breaks out. That is a dangerous game because this could go against you. And some of these patterns will go against you. I'll give you some examples of that. So that's your entry. Exit is the fib extension. You'll typically see me draw this yellow box as far as 1618 to basically a 2x move, right? Now, another note for all of these charts, I'm on log. So it's going to look a little wonky sometimes measuring this above or below levels, right? On the cheat sheets, you will see measure the depth, extend it higher or lower based on the breakout point, right? That also works perfectly well. However, I have found using fib extensions and this zone tends to work the best. It is the simplest way to do it, and it gives you two exits effectively, right? It gives you the first exit and then maybe the let it ride exit at, the 2x or whatever you want to call that. So you got your entry, you got your exit, and like I said, stop loss for this specific pattern would be anything below 50% of the depth of that pattern. So that's cup and handle. You're now an expert. Look at that. Going to move on to triangles now. Triangles are pretty easy to identify because the good ones take forever to play out. This isn't a decade-long triangle on Bitcoin back in the day, 2015, 2016. But it was 260 days, 270 days. There was drama. There was capitulation. There was even a fake out here, right? So this is an ascending triangle, bullish continuation. Again, previous bull trend, right? Previous bull trend. Come into it, we consolidate. Okay, we could have consolidated as a head and shoulders. We could have consolidated as a cup and handle. We didn't consolidate as any of that stuff. Over time, what this ended up being, right? I have the benefit of, not only trading through this stuff, but obviously we're in current year and we've seen this play out. So I'm not just cherry picking here. I will show you some failed ones, but oftentimes you'll see in these extended triangles, you will see several patterns within that. You could argue, oh, here's a cup and handle right here, right? And then we get a failure, right? This is like the Mike Hearn capitulation, whatever it was, right? And then we start to establish this diagonal support, all the while maintaining that horizontal resistance. And again, sneaking up on you is this descending volume profile. At that time, nobody cared about anything, especially towards the end, just the dog days of summer. Extremely low volatility. I'm not going to talk about Bollinger Bands, but that's another thing you can pop onto these triangles. And we had a benefit of a almost high volume fake out here, right? So this isn't an easy one because it does try to take you out of this trade. But how I would trade this today would be to start to accumulate this once this triangle is 3/4 full. And you can measure that based on the expected days it'll take to get to 3/4, right? You measure this out, it's 300 days. Okay, what's 3/4 of that? Okay, anything after that, if it's still bullish, I'm going to start to accumulate. It even, realistically, it stopped you out. And back to what I said before, this was easy, everybody would do it, okay? Not all these are perfect. And depending on how wide you set your levels, you would have got stopped out on this easily, guaranteed, right? So maybe you get stopped out, maybe you re-enter, but in any case, you know where that horizontal line is, and that's where the price wants to go. Eventually, we do get the what's called on-volume breakout. You want a high conviction, high volume, no doubt about it, slam dunk, right? But by that time, the trade's already behind you. It's already happened. You have to understand what's going on leading up to this. It also helps to know a little bit about open interest, a little bit about what short squeezes and long squeezes are. Short squeeze, think about GME, right? That sucker just flew because people were shorting it all the way up. At this time, we had record shorts on Bitfinex. That data, much like volume these days, extremely murky because you've got all these fragmented exchanges, you've got leverage, you've got spot, you've got stable coins, tons and tons of different data points. I barely pay attention to open interest anymore because there's just too much. What are you going to look at? CME? Probably better. Anyway, so you're waiting. You measure this out. I don't measure the pole. You'll see some cheat sheets sort of measuring, the pole. Anything that's super long like this, I just take basically the depth of the pattern projected upward. Can it keep going? Sure. Can it keep going without you? Yeah. Again, you can take partial profit at 1618 and then just let it ride. Move your stop loss to the 1618. And if it goes to $1 billion, you're on that roller coaster. If not, you have a stop loss level right there for you. So here's the current ETH USD ascending triangle. And the first thing you may notice is, Josh, this isn't following a bullish trend. This is coming off of a bearish trend. And you're right. Again, it's not necessarily perfect or stereotypical. I'd have to look at the probabilities on, preceding trend relative to these triangles, but I'm going to treat this one as an ascending triangle. I'm going to treat this one as a bullish reversal, I guess you could call it. In some respects, it's a bullish continuation. But I really, really like this descending volume profile, which got punctuated by FTX blowing up, right? But I wouldn't discount this thing. Some people would look at this and say, oh, volume clearly higher on that day. That isn't a chart pattern, right? I'm like, okay, then don't trade it, right? I don't care. I'm just telling you, this is very likely to react as an ascending triangle. And at this point, it is definitely in that 3/4 full bucket where it's good enough to me that even though this hasn't broken out yet, right? I'm going to start accumulating. I've started accumulating. 1906 was my entry, but it even had a nice fake out here, a higher high failure. This was again event driven. This was the proof of stake liquidity unlock. So there's all sorts of stuff going on in here, but I fully expect this thing to break out 2,500, 3K pretty easily, at least an attempt. And because of the way this is set up, price action shape wise, you have a pretty easy stop loss at 1550. Unlike this example on Bitcoin in 2016, right? You had a continuous, pretty clean diagonal that got broke. So for many people, this was a stop loss level at that time. Here are some other historic examples of ascending triangles on Ethereum, okay? And it is always important to look at volume, not to see whether or not it fits your bias, just to see whether or not it's there, right? So for this pattern, again, this is another one I traded. I know very well what happened here. I know that we broke out. I know that we had an Adam and Eve inside that triangle. We had another Adam and Eve at the very bottom. So the market is screaming at you, I want to go up. I want to go up. And all the while, of course, we had ICO mania. So the event at that time was heavy speculation, market-driven, retail participation globally. So that certainly helped this trade. And then in 2019 on ETH, this was, post ICO treasury releasing the floodgates, right? All these ICOs that accumulated a ton of ETH over the previous 18 months were just dripping. And you had all sorts of stories of people, selling at the bottom, getting liquidated, and you had another consolidation and recovery to a breakout. Do all these patterns lead to multi-month, multi-year, set and forget it, buy a yacht, bullish continuation or bearish continuation? No, they don't, right? These are very specific setups that for me are applicable for leverage trading because it gives you, again, entry, exit, stop loss, and some sort of expectation or time point. In this 2019 triangle, we did have that high volume breakout. Bitcoin, a now infamous descending triangle, bearish continuation. Again, depending on how you measure this, that's going to affect the depth. Depending on what the depth is going to affect where this target before this breaks down, right? You see me on Twitter all the time saying, I think this is going to go to XYZ based on fib extensions. That's it. I don't say anything else. Okay. I don't need to. I know these patterns like the back of my hand and where they tend to play out. So again, much like that ascending triangle example on Bitcoin, we had months and months and months of doldrums, nothingness, death, repeated ETF denials, whatever it was, right? At the time, I wasn't trading this initially as a descending triangle. So again, I have the benefit of hindsight, obviously, here, but when this starts to break lows, when you have a floor and you're breaking that floor, okay, that's bearish. You're welcome for that alpha. And at that time, we had several things going on. We had a Tether insolvency scare, which Tether was insolvent at that time. So we had some volume shenanigans. We had just broad market concerns about Tether. We had Bcash, BSV, Civil War fork. We had miners selling, and we had legacy melting down. TradFi was just apocalyptic at that time. So that collectively is probably not going to lead to bullish continuation anyway, right? So series of lower highs over and over and over again, just knocking on that door. And eventually, the floodgates come in, any of the longs get washed out, and you get some insane volumes after months of nothing, right? And that's what you want to see. But again, as this is setting up, right, that's when you want to get your bias ahead of time, because otherwise you're going to be late, right? And you could always wait till this thing breaks 5,500, right? And say, okay, that's a new multi-year low or whatever it is. That's when I'll take the trade. That's fine. That's highly disciplined, perfectly applicable. And depending on where this goes or where this is expected to go, you will have time to do that. But that's not always the case. And again, you had a previous bear trend before this one broke down. Here's another descending triangle. This time you have a bull trend, okay? And then the triangle. So that's why I don't always stick to exactly what's in the textbook, right? Because this stuff can happen either way. And some people would even call this a bull flag, right? But this is a multi-month consolidation. Volume, again, just dropping to nothing. And let's say you were bullish here. Let's say you were calling this as a bull flag. That's totally fine. But where do you want to trade this? You want to trade this on the higher highs And maybe as it's consolidating, you do nothing, right? You do nothing until you get an actual breakdown or a breakup. That's totally valid as well. So here you have your high conviction breakdown. This was some China nonsense where they had some conference and I think Xi said blockchain or something in some speech and the market went crazy, but this eventually broke down. This was pre-COVID, obviously. So it kept breaking down. But on top of that, we didn't know at the time, but there was also a Ponzi scheme plus token that was distributing or selling, however you want to think about that. So that also was immense selling pressure on the market at that time. And throughout any given trend, you will see these like mini or micro consolidations that can be any shapes of triangle. And these are more equilateral. If there is a strong trend and you run into an equilateral triangle, more often than not, that will lead to continuation. So I do not expect any equilateral triangle that already has an active trend to reverse that trend. I expect continuation 100% of the time. And again, on these mini versions, you have volume dropping off depending on the time frame you're looking at. Most of the charts here are on the daily, but depending on the time frame you're looking at, you're going to see volumes to confirm the direction. Here's another ascending triangle. In this case, it was bullish coming off a bear market, right? We had people saying we are definitely going below 1,000. We had people saying failed experiment. And this took months and months and months and months to eventually break out. It broke out basically on the quarterly roll, short squeeze, high time frame, cloud edge to edge trade, all sorts of stuff here. But realistically, you're trading this as a breakout if you're a good trader. But if you do that, you're late, right? This happened extremely quickly. So for me, I always like to start accumulating here. Even if I was long here and this broke down, I'm not panicking. As long as this high time frame support is intact, we're good to go. On top of that, I'll get to Adam and Eve in a second, but we did have more examples of Adam and Eve in these long time frame triangles, which you typically see. And eventually you did get your high volume confirmation when we broke diagonal resistance. Here's a failed version, two failed versions of ascending triangles. This one just happened, feels like the other day. This was right before Luna broke the entire market, right? It eventually exploded. It was a Ponzi. They were buying BTC in here. And I was calling this as an ascending triangle because that's to me what it was. This was the diagonal support and it did break down, right? It gave you a week or two before it really broke down. But the market was telling you, okay, this thing is not going to play out as you think it is. And it did lead to strong bearish continuation. So this is a pattern that I thought was going to break up, did not. And really, expectedly, broke down opposite, extremely strong. There was also an inverted head and shoulders in here that I traded that failed, right? Went below that shoulder. Kind of hard to see on here, but again, the market was screaming at me, hey, this thing does not want to break up. Okay, the Fed is raising rates, right? There's plenty of reasons why the market was bearish, setting up to be bearish at that time. Another example of a failed descending triangle would be this here, where this looked all but certain, kind of an unwritten rule with the triangles too is maybe they're wedges. Maybe this was a falling wedge. I think I was calling it as a descending triangle at that time, but certainly descending volume, and eventually you got volume confirmation that this was moving higher. And this may have been some 3AC shenanigans. We'll see what history says about that. This was clearly Luna shenanigans, right? They were buying. That's not to say every failed chart pattern has some, market stuff going on behind it, but it is interesting how that works out some of the time. Probably just anecdotal. All right, those were triangles. Let's move on to head and shoulders. Now, head and shoulders is a variation of a triple top, exactly how it sounds. You have an ultimate high flanked by usually two equal and lesser highs. Okay, this is a messy, sloppy one. I'm starting with this on purpose because they don't always look pretty. Okay, this has wiki lows, sloppy heads, sloppy shoulders, all sorts of. It's a mess, right? But again, this is for me saying I'm trying to tell you to stay out of trouble. That's what the market's telling me. And if I think it looks like a duck, it's probably a duck. So I'm going to say, okay, you're right, market. You know what? I won't be mega long here. I'm not going to treat this as bullish continuation, and I'm going to step aside. Again, you have, kind of a high volume conviction breakout here, but this was early days of ETH, not to excuse the pattern, but if you're trading alts on some newly listed alt on some exchange that no one trades on, the volume is going to look wonky. Okay, that's just how it is. Again, you're measuring the depth, projecting downwards. So on log, fib extensions to the downside don't really make sense. So it's often better to just use a line, for depth and take it from there. Another head and shoulders on BTC in between those flanked failed triangles. Again, these are not always pretty, okay? These are messy. People will deny them, but it's important to at least think about what that would look like as far as bearish continuation. If this starts to set up in my head, I'm like, okay, I know exactly what to do. I'm not going to be long here. I need to start letting go, or this is where I need to be out of the market completely. And until we make a higher high on this right shoulder, left shoulder, right shoulder, head, until we make a higher high on the right shoulder, I'm in the head and shoulders camp on this stuff all day long. The volume is completely flat, right? We barely get a volume reaction here, but we're also at, 70K Bitcoin all-time highs, right? If we're at all-time highs on anything and you get, this double top stuff with a head and shoulders, that's just not a recipe for continuation. That's distribution all day. Here's an inverted head and shoulders, bullish reversal. Again, shoulder flanked with a head in the middle. One of my most profitable trades ever. That's why it's so familiar. That's why I remember it so well. They don't always look this clean, but when they do look clean, even this volume's kind of a mess, honestly. But many times what people will do is start to accumulate in the right shoulder, after weeks of setting up for this, sort of waiting till that breakout. You're kind of giving some to the market. Yes, there's lower risk, but there's also a lower reward, obviously. And that reached its target and then some and then pulled back, right? So these typically aren't trades that I hang on to for an extended period of time. If they're setting up like this, if I'm on leverage, that sort of thing. Another example of a lower time frame, inverted head and shoulders. Again, it's, this is probably closer to a 3 Buddha bottom, right? It's just a triple bottom. Shoulders are a mess. Head's a mess. This was after the G candle. Volume is, who cares, right? But eventually this does go. So if I see this, I treat it as an inverted head and shoulders. This is another example on oil that I just wanted to add because your target won't always be hit immediately, right? So you may need to wait, and that's again up to you how long you want to wait as far as staying in the trade, waiting to hit your targets. And realistically, this never really made a lower low. You'd maybe get in trouble in this area. This is a daily chart. Legacy moves pretty slow, so you got to keep that in mind, right? So if ETH starts to break out, for example, real life example, if ETH, for me, if it starts to break out above 2K and it doesn't really do anything for a couple of weeks, I'm not in a rush. It took a year to set that sucker up, right? I'm not going to immediately close it because I'm impatient and it hasn't reached a target yet. Another sticking point, just said a different way, head and shoulders isn't always at the top of a market. Sorry. It can be anywhere. You can see it anywhere. So this again is oil. You get a previous bear trend. If you get a head and shoulders at the bottom of a bear trend, that is extremely bearish. Okay. Expect bearish continuation. Expect this thing to keep going. Again, until it's above that right shoulder, this is a mess, right? This is diagonal. It's sloppy, whatever. But until this is above the right shoulder, I am not bullish or expecting a bullish reversal in any way, shape, or form. Here's another inverted head and shoulders around COVID lows, event-driven volume will disrupt your volume profile, right? On top of that, we have the Bitcoin halving, right? So there's all sorts of events going on. This thing's a mess. Here's that head and shoulders I just showed you a couple charts back. Ended up being a left shoulder of this mess, right? Some people would say this isn't a head and shoulders, right? Really the tip-off for me here is that we have a horizontal neckline. We have a clear resistance level. And then what's below that doesn't have to be perfect, but it's good enough. And then we get what's called a throwback where this thing comes back to the neckline. Okay. And then the rest is history. So I'm just showing you examples that hopefully hit home that it's not going to look like the cheat sheet every time. Okay. It's going to be all over the place, right? This is a low time frame head and shoulders that failed on Bitcoin. And again, we had all sorts of bearish stuff here too. We had, Bitstamp issues. We had Binance issues. So it felt like even the news wanted this to be bearish. We were coming off of a bull trend. We had a pretty sloppy, neckline. Again, this was a market-wide dump event, but the shape of this sort of tips you off that, okay, maybe this won't play out as a head and shoulders. It looked much better on high time frames. But realistically, this thing kept making highs day after day after day above what would have been a right shoulder. Okay. So your first stop loss is always above that right shoulder, or any higher highs should stop you out if you were accumulating a short position. And then, if you're still short and it's making a new high above the head, then you're in trouble because then it's just something else entirely, and the trade's definitely gone way against you. And eventually you do get some more like high conviction volume coming in. But again, this isn't perfect volume profile either. Here's a failed inverted head and shoulders. This was in 2018. I think this was around the time of the infamous 33K by July call. But this looked pretty good. Looked pretty good on the cloud as well. That failed. It looked like this was going to be a bullish Kumo breakout. And we failed at the neckline. And we broke the right shoulder on volume, right? That's a no-go. Then you know you're done. And that chart pattern is invalidated. Moving on to wedges. Now, I get a lot of pushback on whether or not wedges are bullish or bearish. For me, right, it's up to you, but for me, if I see a rising wedge, for the most of the time, I'm going to consider that bearish, and I will treat that as bearish. Because you always want a descending volume profile anyway, that means you will have automatically, if this is a real pattern, realistically, a bearish divergence on top of that, right? You're getting higher highs on less volume. You'll also get almost always a bearish divergence on RSI. So momentum is slowing down. In this case, we were rising wedging at 60K. There's some cloud evidence as well why this broke down, but you do get your high volume confirmation. So I was not treating this as bullish, which ended up being correct. But that certainly isn't always the case, especially with crypto. This is a falling wedge, which again, sentiment was in the toilet. This was 2018, after everything blew up. People were sure we were going back to 1,000. They were staying short. They wanted it lower, right? Sentiment was extremely bearish. And it is just a series of lower highs and lower lows that get tighter and tighter and tighter. And really it leads to bearish capitulation. You lose momentum. And again, you have a bullish div on RSI, bull div on volume, and there's your reversal. I'll just mention a variation on that we see often on altcoins is this like Reaper's sigh or sickle falling wedge that doesn't always break up, and you can see it, just droops down like that. This is also another type of capitulation where people just throw up their hands and that's that. But you'll see this a lot in altcoins and DeFi land where just drip, 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 and then that gets quicker and quicker, gets parabolic, and then just comes to a crescendo at the bottom. Moving on to Adam and Eve's. This is ETH 2016, end of the year, coming off of a terrible year where it's dealing with the DAO hack, DAO fork, the birth of ETC, and at the very bottom you do get a type of double bottom known as an Adam and Eve bullish reversal. Again, as a breakout trade, your entry is very clearly the horizontal resistance, your stop loss is any lower low, and away it goes, right? You can measure this out for an expected target. In this case, this kept consolidating. This is another ascending triangle. Here's another ascending triangle, Adam and Eve, right? You get a third sort of scoop. So you do have to have your wits about you when this stuff is consolidating and you identify it, because it doesn't always doesn't always lead to continuation. It doesn't always keep going. And then sometimes it's a new paradigm. This was ICO mania basically that led to this continuation. But sometimes you'll also see, here's another double bottom. In the macro range, you'll see a double bottom, just below the macro range or within the macro range low, something like that. But the difference between this and a double bottom would be a V and a U as opposed to two U's, two V's, whatever. It doesn't matter. You don't need to call it an Adam and Eve, but it's just stereotypically you'll see that very often. Here's something that I don't think people called an inverted Adam and Eve at the time, but again, it's a variation on the M double top. It's Bitcoin on the weekly, and it's messy, right? But if I see anything remotely close to this, it is extremely hard to stay bullish. Just like down here, here's an Adam and Eve, right? V, U. I can't stay bearish if the chart is screaming at me, hey, this is probably going to be a reversal here. These high time frame charts don't always measure to where you think they would go, so I'd keep that in mind. Along your journey here, didn't obviously, we didn't reach maybe an expected target based on the depth, so I'd definitely be careful in that department. Diamonds, kind of moving on to the more exotic charts. Don't see this one too often. Probably the best example ever on crypto is this Binance Bitcoin pair 2019. It is a bearish reversal. It's a reversal pattern. This is coming out of a bull trend, right? And then you have extreme volatility. Typically it's not tilted. I don't really see too many tilted diamonds, but you see this crescendo price action, high volatility, And you do get multiple touches of diagonal support and resistance. And again, measuring to the downside with the depth, this did eventually hit that target. I took the Binance volume off because it's junk, right? It's wash, fake, whatever you want to call it. It is irrelevant. I just wouldn't even bother looking at it. But this is a really good example of what a diamond looks like. Here's a potential diamond right on ETH BTC. I've talked about this for, I don't know, 6 months plus. Not perfect. Volumes all over the place. A few touches on both sides-ish, right? But until this makes a higher high at this point, I'm expecting bearish reversal. And just to review some patterns, historically, we've had a successful inverted head and shoulders on ETH, multi-year ETH BTC. We've had a failed diamond bottom, right? This led to an extreme bearish move to the downside. We had an M double top. We had probably an inverse cup and handle, right? There's all sorts of stuff up here that is not a clean trend. It is a type of consolidation over an extended period of time that did lead to an extreme move, right? That's another way to think of chart patterns. Consolidation leading to strong price action in one direction or another. Megaphones, luckily we just talked about these the other day on Twitter. Megaphones are kind of like an inverted triangle a little bit, right? You have this growing volatility. This can lead to a diamond. I would always put a midline on the Megaphone. These are 50-50 patterns. I don't really like trading them, but you typically have some sort of event-driven volatility, whether it's, long squeeze, short squeeze, news. This was SEC and BlackRock, or not BlackRock, but SEC asking for more info on ETFs, that sort of thing. Previously, even in the year, we had a Megaphone leading to bullish continuation. But, these are highly, highly, highly volatile. I just think they're, in general, hard to trade. This is one of the best examples ever on Bed Bath & Beyond. Multi-year Megaphone. Bulkowski would call this a descending, broadening wedge. I like, shortening that to Megaphone. But this did break up eventually, and, BBBY is bankrupt now, right? So this isn't exactly, just because it was a multi-year consolidation doesn't mean the business is okay, right? We're just trading a chart here, and that's important to keep in mind. And then here's an active one on Link that I'd consider a Megaphone with a bullish bias, right? It has a flat horizontal resistance. But until it's closer to 9, I don't want to touch this. It does have descending volume profile as well. So just to wrap up here, over time, you should start to see several variations on different patterns, right? Depending on the market. This is Kraken at the beginning of DOT, when DOT got listed, right? Here's a cup and handle. Technically, this broke the 50%, midline of the pattern depth. It still kept going. You had a volume breakout. Great. Here you have a variation on head and shoulders where the right shoulder is higher than the head. Is this more of a type of Megaphone? Potentially. I think most people would identify this easier as a head and shoulders. Again, you get the volume confirmation on the breakdown. And then here's, what's happened in the past year on Bitcoin, right? It's just been pattern central because we've just consolidated over and over and over and over again on high time frames, on low time frames, on entire year, right? We had event-driven volatility. We've had crypto event-driven volatility. We've had banking event-driven volatility. We've had ETF announcement-driven volatility, right? Even still, these patterns have held up and have played out as I would think as expected. Inverted head and shoulders, throwback, most recently head and shoulders, falling wedge. Now you've got this high and tight flag that could also be called a Megaphone. So it is definitely important to know when to apply chart patterns, when not to, right? What to look for. This is ADA BTC just randomly, right? 2018, 2019, and so on. Series of, maybe not so much anything, but certainly not bullish. Into an inverted head and shoulders, into, range bound consolidation. Maybe Megaphone there, definitely Megaphone here. And then, you look at ADA BTC today, and I wouldn't call this anything but a downward channel. So the other battle with patterns is to know when to apply them, know how to trade them, how to recognize and identify them. So I hope this video was helpful. There will be timestamps on the video because I know it was super long. That's all for this one today. Like, dislike, comment, share, subscribe, and happy trading.